Well, good afternoon, everybody. This is Clarkstown Supervisor George Hoehmann. I'm joined by Tom Morley from the Small Business Development Center here in Rockland County, located up at Rockland Community College. And delighted to have Tom. He's been a regular guest with the town of Clarkstown doing these webinars since the start of COVID. And he's been just a real great resource, not just to the folks here in the town of Clarkstown, but to all the people in Rockland County. And we're delighted to host Tom, who's going to be talking about the Restaurant Revitalization Fund with a preliminary overview, just a few housekeeping matters on this presentation. We will be taking questions and comments. Tom is happy to answer any of your questions or take any comments. So you just need to raise your hand via the webinar function or to ask a question, and we'll bring you live when Tom is done presenting. In addition to that, we can move ahead also with sending everybody a PDF of the presentation when we're done. This is also being recorded, and we will upload this to the Town of Clarkstown YouTube channel. We encourage everybody to subscribe to the Town of Clarkstown YouTube channel so you'll know when new videos are being put up. We also have a great Meet Me on Main program that we have a number of shows that we've already recorded and a number of restaurants that have participated in it. We'll be filming more of these as well. So those are also located on the Clarkstown YouTube channel. So I encourage you to, doesn't cost you anything, just sign up, subscribe to the Town of Clarkstown YouTube channel. We will also be broadcasting this for those that live within the Town of Clarkstown on a kind of a regular basis. We'll pick a day and a time that it'll be broadcast on our public access channels. And so that is channel 78 for Cablevision and channel 35 for Verizon. So again, without further ado, Tom Morley, who is the director of the Rockland Small Business Development Center under the SBA, located here in Rockland County at the Rockland Community College campus. And Tom, as I said, has presented on a regular basis several times. We keep his presentations, and really thankful to have Tom here to help us. And again, we will be taking questions and comments. Tom will be doing his presentation, and then we'll be taking questions and comments that you might have. And hopefully there'll be real resources. There is a lot of funding available and resources that are now available through the American Rescue Plan, as well as through this Restaurant Revitalization Fund that has been established. And we also expect that there may be additional funding coming down the road that will certainly help small businesses and in particular our restaurants. And as I said, we'll make this presentation available. And if you are not on our mailing list for the Town of Clarkstown and you're a restaurant owner, we have a restaurant mailing list which we're growing. Please contact my office at supervisorclarkstown.org or reach out directly to Jeff Gillies, and we'll get you added to the list, and we'll also send a PDF out to anybody that's on the list with restaurants. So without further ado, Tom, thank you for doing this. And thank you for the doing this presentation and helping all of our businesses, especially our restaurants. I turn it over to you, Tom. Take over the screen and make your presentation. Hopefully we can help a lot of people today.
Thank you, George. I appreciate it. I appreciate the opportunity to get the message out to the restaurant community here in Clarkstown. I do want to just qualify this that today's information is preliminary still. SBA has not finalized the program. We've received some guidance on the program, but not our final guidance on the program. So this information is subject to a bit of change, not a lot, but a little bit of change. So just kind of a quick overview, there's $28.6 billion in the federal government Restaurant Revitalization Grant Fund for restaurants impacted by COVID. It's a significant program because it's replacing revenue. It's important to note that you can seek a grant for your pandemic-related revenue losses, not operating losses, up to $10 million. Granted, not many of us would qualify for the $10 million range, but the way they're going to figure this out is they're going to look at your 2019 gross receipts minus your 2020 gross receipts which will tell them what impact the pandemic had on your particular restaurant. There are adjustments to this, so do be mindful. For example, PPP loans that you've received will be coming off this amount. Other things won't be, though. We'll get into a little more detail as we move along with today's presentation. So let's take a look first at who is eligible. It's a fairly broad definition of restaurants: food stands, food trucks, food carts, caterers, saloons, bars, taverns, brew pubs, wineries, cideries. All sorts of folks are eligible. However, keep in mind that one of the things that SBA will be looking at in this is, what is your principal or primary purpose of the business? It has to be where patrons assemble for the primary purpose of being served food and or drink. So yes, bars are eligible. Wineries, cideries, brew pubs are eligible, provided, of course, that approximately 1/3 of your revenue is from the sale of products for on-premise consumption. For those with liquor licenses, they'll be sensitive to that difference between on-premise and off-premise consumption. For restaurants, I'll be saying, well, what about to-go? To-go values are still considered on-premises consumption for restaurants, as long as they meet all the other requirements of the program. If you are a franchise, you can reach out to us at SBDC. We can help you with this in terms of, is your franchise on the SBA franchise list? If so, you've got an SBA franchise number. You'll need to include that on the application. If you're not on the list, and believe me, there's plenty on the list, if you're not on the list, you'll have to include a copy of your franchise agreement. How will you do that? You'll scan it and upload it as a PDF. Bankruptcy may or may not prevent your application, depending on where you are in the process. If you're operating on an approved plan of reorganization under Chapter 11, 12, or 13, and you meet all the other requirements, you're probably going to be eligible. Chapter 7 liquidation is not eligible. If you filed a 7 or a 13 but have not yet gotten an approved plan, you will not be eligible absent that plan. Businesses that have permanently closed are not eligible. Some folks are going to say, well, how do we determine permanently closed versus I closed for the past year? If you have no intention to reopen, you've permanently closed. If you try to apply for a program with the federal government and say, oh, I'm going to reopen, and then you don't reopen, the federal government will come after you to get the money back. And as we hear on the radio ads for other things, the federal government is the largest collection agency in the world. Per the legislation that set up this program, there are priority groups. The priority groups are those that are 51% owned by one or more persons who are women, socially or economically disadvantaged, and have daily control and management of the business. So the fact that you might have a minority owner or two does not necessarily make you one of the priority group businesses. And if you say, well, we're 50-50 partners, that's not 51%. SBA is accepting self-certifications in terms of what group you may or may not be in. You do have to provide a copy of your driver's license or some other government-issued identifying information as part of the application. So do keep in mind, they would look at, I don't know if you guys can see me in the presentation right now, but if you can, if I went in and said, no, I'm African-American, and they look at my driver's license, they're going to see, geez, Tom, you look kind of Irish to us. So be prepared for audit and follow-up on these things. This also, and I do need to point this out, this is not just a one bite at the apple program, like the economic injury disaster loans. You could only apply once and get it once. You could appeal it and whatever. This is a one bite at the application program. Once you've applied, that's it. You could never apply again. That's important because if your application is rejected, you cannot apply again. There's no appeals process on this. So just keep that in mind in terms of accuracy with the application, and we're going to get into a little bit more of that a little bit later on as well. So who's not eligible? State or local government-owned or operated restaurants are not eligible. Operators of more than 20 locations. Any business with a pending shuttered venues operator grant application. That's important for some folks that may be, for example, dinner theaters, comedy clubs, things of that nature, where you have to make the strategic decision which program is going to be better for my business, the SVOG or restaurant revitalization. Any business that's publicly traded or participates in public equities markets is not eligible. Other entities that are not eligible, nonprofits, which is different than not making a profit. If you're not eligible for a minimum amount, we think that's probably going to be about $1,000. So if you look at your sales from 19 to 20, take off your PPP loans, and you're going to get like $907. Save the grief. It's not going to be an easy application, so it will be worth saving the grief. They're probably not going to process it. If you're on the Treasury's do not pay list, which you may be if you owe the government money, if you've defaulted on student loans, if you've defaulted on tax obligations, things of that nature, you might be on the Treasury do not pay list, in which case any amount that you would be eligible for would be taken by Treasury. It won't go to you. In some cases, if you're on the Office of Foreign Assets Control sanctions list, probably doesn't affect a lot of folks, but depending on who has an ownership interest in your restaurant of 20% or more, it's a possibility. If you're on the death records list, now a lot of folks say, well, I'm not dead if I'm listening to your webinar today. True, but if you have run into that in the past where you've done something with the federal government and they've said, sorry, we think you're dead, you know that you're going to be on that list. Be prepared to deal with that as you may have dealt with it in the past. Okay, let's take a quick look at a couple of definitions. Majority ownership. Since this program is targeting underserved populations and the socially or economically disadvantaged, minority ownership actually includes women, veterans, African Americans, Asian Pacific Islanders, Native Americans, and subcontinent Asian Americans. Like I say, SBA is accepting self-certification on this. The priority that's associated with this is simply one of chronology. It's one of time. The first 21 or so, or 28 days of the program, depending on what they finally decide, the only applications they will process are from those populations. They don't get more money. They don't get any benefit other than their applications will be processed in the first batch. That's to ensure that the money gets to the places that the federal government wants it to get to. The majority ownership is defined, again, it's self-certified, and they're fairly flexible with it. So if, for example, there are 5 people that own the restaurant, if 2 are women and 1 is a veteran, you've got a total of 60% ownership from underserved or socially or economically disadvantaged populations. That counts for purposes of this program. It doesn't count for other programs, but for purposes of this program, it does count. But again, be prepared to be able to document that. Size regulations. There are limits in terms of who can do this. We went through a little bit of that with the 20 locations and such. Essentially, if you think you're a larger than many businesses business, think twice, check with us, we'll let you know if you're going to qualify. Affiliation is a very complex set of rules with the SBA. If George and I both own an interest in Jeff's restaurant, and George also owns an interest in a pizzeria somewhere else, and I own an interest in a Dairy Queen somewhere else, we now have 5 businesses that are by law affiliated. Only 5 businesses can apply if they're from the same affiliate group. So you may inadvertently, depending on how you're structured, you may inadvertently trigger the affiliation rules. If you own more than 1 restaurant, or if your other owners are involved in other business ventures, even in unrelated industries, check with the affiliation rules. If you need some help on that, again, give a yell. SBDC can help you. Your attorney, your accountant can help you with that. There is a body of law on it. It can be looked up. Documentations and certifications. SBA will be requiring, like I say, identification. You're going to have a photo ID that you're going to scan and submit as part of this application, which is being done all digitally, by the way. Yes, there's a form for this application. It's an SBA 3172, I think it is. But they're not accepting paper applications. This is going to go online, period, end of statement. So be prepared to be digital. Be prepared to have a scanner handy, or get really skilled at taking pictures with your cell phone and scaling down to the correct size for pages and everything else. You have to certify a lot of things. I will be as polite as I can in my next statement. Restaurants, in some cases, have a notorious reputation for not always accurately reporting their sales. Yeah, we've all heard the old joke about which set of books do you want to see. The only set of books that the SBA wants to see in this application is the correct one, and the one that matches your tax returns. If you say, oh, I did $1 million in 2019, I only did $100,000 in 2020, and your tax return for 2019 says $700,000, your application is going to be rejected. Like, period, end of statement, and then you're done. You cannot reapply. They track the reapplications by EIN and SSN, Social Security number. So just keep in mind, you've got to be accurate in your numbers. There are some other programs set aside for small and medium locations by sales volume. That's for restaurants that do under 50,000, under 250,000, and under 500,000. The set-asides are $400 million for one, $500 million for another, out of $28.6 billion. So it's not really going to affect a lot of folks on today's call. And then the priority period we talked about, that's the 21 days or 28. We're not sure which they're going to go with yet, probably 21. That they will process the applications from the targeted populations. Okay. So getting ready to apply. Like a good meal, preparation is important. And even though the application isn't out yet, you can still get ready. Gather your documents that clearly show your revenue and expenses. And you may say, well, this is a revenue-based program. Why do I need expenses? Because it's the government and they're asking. Beyond that, I really don't know what their rationale is, but they're going to ask it. So be ready for it. You'll need to know the value of your PPP loans that you've received. And that's not going to be, oh, yeah, I got $31,000. No. You got $31,246.39. You need the exact amount. This is being done by computer for a lot of reasons, not the least of which is they are going to go look it up and see, is that the correct number? They don't care if you underreport or overreport, it wasn't correctly reported. So it's wrong. So be careful with that. You're going to need your corporate organizational documents, which is the fancy way of saying, when did you start? What's your form of business? Do you have your corporate kit? Do you have a certified copy of your incorporation? Things of that nature. You're going to need that. You're going to have your financials and last 2 years of tax returns available. Even though the application isn't finalized yet, it's the government. They have lots of questions. SBA is an agency dedicated and devoted to lending money. So they do underwriting. This is a big change for them to just be giving away money. FEMA gives away money. SBA lends money. So keep in mind that that's the mindset they're starting this with. Okay, so you need your financial information. If you're using a report from QuickBooks or some such thing, because maybe your 2020 tax returns aren't done yet, then you're going to have to sign those statements as a person responsible for it. You need your identifying information for the business itself, the status of the business, your ID information, your personal information, which they will ask. These are grant applications. If you've not done a grant application in the past, just keep in mind they can sometimes be a little more complex. And even though, like I say, we don't know yet when they're going to open, SBA is working pretty much literally 24/7 to get this portal open. There will be a test group of folks invited to apply. They're not going to get their money any faster than anybody else, but they want to stress test their site to make sure it's going to work. And that should happen sometime in the next week or two. So I'm guessing sometime in the next 2 to 4 weeks, this will be open. So I would start getting my stuff ready. Just start a folder and keep it on the side of your desk. And closing thought on that section, please make sure your information is accurate. They will not deal with things that don't match. Okay, SBA Form 3172, I do remember that right. Okay, that's the application. You can Google that. There is a sample application that's out there online. Can it change from that? Absolutely. Will it change dramatically? No, but that will give you an idea of what they're asking for. They will be verifying all of your tax information. You will be signing as part of the application a 4506T on the application portal that will be pre-populated with some information by the SBA. What that does is it allows SBA's computer to go over the IRS computer and say, hey, we want Tom's tax returns for this year or that year. They compare that information. If there's any difference, it's a problem. So please make sure that the numbers you're using are the numbers you have reported. You have to document your gross receipts. They've got a bunch of things that you can use to do it. Keeping in mind, of course, that what you use has to be sufficient and material. You can use your business tax returns, 1120s, 1120Ss, IRS 1040 Schedule C, depending on your form of incorporation, 1040 Schedule F for partnerships, other partnership ownership groups can use a 1065. You may need bank statements, externally or internally prepared financial statements like an income statement, P&L, balance sheet, point of sale report. And I'm going to get into a little bit of a side note here. The SBA is working with Square, Clover, and a couple of other folks that do restaurant point-of-sale systems to enable you to access the application via the point-of-sale system that you're currently using. To do that, you'll need to make sure that you've updated your system, make sure your connectivity is good, and keep in mind you're probably also giving them access to the information that's in that system, because the system is going to pull information to put in the application. So once again, please make sure your stuff is matching. If you sell alcohol, depending on how you're selling alcohol, if you're a microbrewery, so you're producing alcohol, you will probably also need your Tax and Trade Bureau filings, your TTB 5130.9 forms. If you deal with Tax and Trade Bureaus, you'll know what that is. And that's just to document certain types of sales. Because, for example, if you're a brew pub, the beer that you're brewing and selling doesn't count towards your gross revenue in terms of calculating how much you're going to get. Only the products that you sell on site for consumption on site are going to be included. So your Tax and Trade Bureau form validates what you're selling under your off-premises licensing. Okay. Whoops. We talked about the TTBs. Okay, for applicants that are an inn or a hotel or some such thing, your on-site sales of food and beverage to the public will have to comprise at least 33% of your gross receipts for 2019. If they did not, you will not be eligible. They're going to consider you a hotel, not a restaurant. We've already seen a bunch of questions in terms of, well, I have a dinner theater, I have this, I have that. I have a bar that does these kind of presentations, whatever. If you don't think you fit neatly into one of the categories, give us a yell, 845-356-6065. That's my shameless plug for the SBDC. And everything we do is free and confidential, so don't worry about it. We can help you figure it out, how that's going to work for you. And be prepared to prove the sources of income if the on-site restaurant sales are not 100% of the revenue. You have to have a history of showing, oh, this is what I collected from ticket sales at the door. This is what I collected from merchandise sales, selling T-shirts, whatever. This is what I collected from food and bev sales. So just be prepared to document all that. To put this in a little bit of context for folks, oh, and I should note on this before we start this slide, if you started operations in 2019, either late in 2019 or during 2020, there are different formulas that will be used. So just give us a yell and we'll tell you which formula is going to apply to you. So the federal application for this program is $28.6 billion, which sounds like a lot of money because it is. But if you look at the potential applicant pool of just restaurants, bars, and caterers, there's 955,000 entities in the United States that are technically eligible to apply for this program. If those 955,000 folks applied, there's $29,919 each that's available. Why am I saying that? Because early birds get the better worms. Be ready to apply as soon as you hear this is open. Don't rely on us. As much as George runs a great office up here at the town, you're going to hear this in the media before you hear it from us. We can have the coolest mailing lists in the world. We're going to read it somewhere and say, oh, okay, let me do an email now and get this out to the group. You're going to hear it somewhere. You may hear it from us first. You may hear it publicly first. As soon as you hear it, plan on doing it. Do not wait. Well, I'll do it next week. There's a lot of people doing it this week. No, get your application in so you're online.
And Tom, could you just clarify, not to interrupt, but there is preference for equity reasons, you said? So
yes.
So more importantly, if you don't fall into one of those categories, you're going to be held back anyway. So it's important to make sure that if you're not a woman or a minority-owned entity, that you will be how many weeks behind everybody else?
You'll be 21 days behind the priority groups, but your place in line is your place in line. So if you applied on day 2 that the portal was open, well, you're in with all the other folks on day 2. You're ahead of the folks that were on day 3.
Okay.
So you can apply. SBA just won't process your application until the priority period has passed.
Got it. Okay.
But you can still apply, and I encourage everybody to apply as soon as they can. It's going to be a pain, without a doubt. The site's going to crash from time to time, I'm sure, with this many people trying to get into it, but be patient, bear with it. You can be looking at a serious amount of money that's not a loan. It's a grant. They're going to give you the money, and we're going to get into what you can use it for, which is pretty flexible. So believe me, it's worth it. Okay, so in round numbers, what they're going to look at is, your 2019 revenues versus your 2020 revenues to determine what your lost revenue was. It's important to keep that word revenue in mind. They're not looking at operating losses. They're looking at lost revenue. And for the purposes of this program, gross receipts does not include amounts that you received from Paycheck Protection loans, first or second draw, forgiven or not forgiven. If you've received an EIDL, Economic Injury Disaster Loan, or an advance on EIDL, it does not include that. It also does not include any state or local grants, via CARES or otherwise, or Section 1112 payments or deferred loan payments from SBA, which ordinarily, a lot of those things you would have to recognize in your accounting statements. For this program, you do not need to recognize those amounts. They're not going to count. And it's important that you have accurate information in terms of what each of those amounts is. Now, they will be deducting any Paycheck Protection Program loans you've received, first or second draw. Reason being, the government is saying essentially, well, we paid that payroll for you. We're not going to pay it again for you. There's also sort of a concept with the federal government, even with disasters, they'll give you free money once. The second draw Paycheck Protection was kind of except for that. They gave it twice, but that's really rare. So that's why they're deducting that. But interestingly, they're at this point in time, they're not deducting EIDL advances, which is a good thing. So that's kind of free money twice, I guess. On the set-asides, we talked a little bit about that. The breakdowns are receipts of not more than $500,000, $500,000 to $1.5 million, and a different batch for smallest restaurants under $50,000 a year. So depending on where you are in those groups, you may or may not trigger one of those things for that. Now, the next page is a little bit trickier. We're not going to go through this because I would definitely put everybody to sleep on this one. And we will send, Jeff I think is going to send the presentation out to everybody so you can actually just read the page and figure out which ones apply to you. And that's how does this interact between programs? The biggest interaction here is the deduction of Paycheck Protection loans and or shuttered venue operators grant. You cannot get an SVOG and an RRF grant. I'll say that one more time just to be sure. So if you're going for an SVOG, you cannot get that and get the restaurant revitalization grant. That's a one or the other. So depending on what kind of venue you are, you may need to make the strategic decision which one's going to be better for your particular circumstance. That's going to be an important thing to do. Okay, using the funds. This is the fun part. They're going to give you money for free, and now we're going to say, okay, what can I do with this money? You can use it for most of your operating and ordinary expenses. The government generally is loath to pay for anything involving alcohol. If as SBDC we host some sort of dinner for awards or for this or that, or for folks that might remember, we do an annual set of Hispanic Business Awards at a luncheon. There's a reason there's no wine on the table because we can't pay for liquor. In this case, you can. If it's part of your ordinary supplies, you can purchase it. You can pay rent, utilities, mortgages. You cannot prepay your mortgage. You can pay existing debt. Now, the tricky part with that is we think the date they're going to use is it has to be debt that was in place prior to February 15th of 2020. Not sure why they're doing that on this program, but that's what they've been doing on a lot of other programs. We think that's what it's going to be. I should have corrected that. We have utilities twice. So if you owe 2 utility bills, you can pay them both. You can pay maintenance expenses, personal protection equipment, leases, insurance, pretty much any ordinary operating expense that you historically have had in your business. Does that mean you can't go get a new supplier? No, but if you've been buying, rice and potatoes and beans from supplier X and you go to supplier Y, that's fine. I mean, changes like that are fine. The specifically disallowed expenses include buying real estate, making investments, making loans, or contributions to or on behalf of or in the interest of political advocacy, also known as lobbying. There's another clause that will be in the agreement that you will sign to receive the money, and that says, and any other use disallowed by the administrator. Because invariably, when you've got 1 million folks that are going to apply for a grant program, there's going to be a bunch of weird circumstances out there, and someone's going to have something that not too many other people have, and the administrator is going to say, yeah, we don't like that. So you can use this money also for building outdoor space. That is specifically an allowed expense under this. So if your restaurant's been trying to get by on some folding chairs and a couple little funny tents from Costco kind of thing, you could formalize your outdoor space. And so it does have lots of flexibility for you. You will be required to maintain documentation demonstrating your compliance, not just with your eligibility and with your application information. I'll say that again. You have to maintain information that documents your application. You then have to maintain information that documents how you used the money. And you may say, well, it was a grant. They gave me the money. I did regular stuff with it. Well, good. You have to be able to prove that. They will audit. If you're a particularly successful restaurant and you get an amount close to $2 million, you will be audited. Anything over $2 million with SBA gets audited automatically. If you're between $1 and $2 million, you got about a 50% likelihood of being audited. Above $150,000, it's not 50%, but there's a decent chance you'll get audited. Under $150,000, it's less likely, but it's still possible. And the records that you ordinarily keep in your business are probably going to be more than sufficient for what they would require. But you have to maintain all these records for not less than 3 years after you receive the money. Okay, we talked a little bit about SBA affiliate rules. The rules are complex. If you think one of your partners or other equity owners of 20% or more of your restaurant have other interests, get some professional advice. Talk to your accountant, talk to your attorney, talk to SBDC, call the supervisor's office, talk to somebody. It's a complex piece of legislation and regulation, and things can be deemed affiliates even if they're unrelated. So if you own a gas station in Orange County and a restaurant in New City and a gym in Bergen County, since you own them all, they're affiliated even though they're in totally different industries. And one of the ways that the affiliate rules get invoked with SBA is it applies to the maximum things that you can get and or the number of applications that you can submit. So let's say you own a theater, a movie theater up in Albany County. Well, if you're affiliated with a restaurant in New City and you did an SBOG application for the movie theater in Albany, that will preclude the restaurant in New City from applying. So if you think you might be subject to it, there's a website that's got the latest chapter of those rules. Or like I say, get some professional advice. We'll do whatever we can to help you out.
So, Tom, in that regard, just many restaurants also own their property, their business, and oftentimes those are under separate corporations.
Right.
How would the affiliate rules apply in that instance? I'm thinking, I don't know if she's on the webinar, but one of our local owners, the bowling alley, which does food, also owns her own business. I don't know if she owns them in the same corporation or separate corporations. How would the affiliate rules apply in that instance?
Generally, if most banks and SBA do accept ownership of real estate separate and apart from the use of the real estate or from the occupier of the real estate for legal, accounting, and other purposes, that's generally not going to be a problem. We may have to disclose it because they will ask on the application for any other affiliated businesses. So if I own the restaurant and that's, Tom's Restaurant Incorporated, and I own the land under Tom's Realty Incorporated, I have to disclose the fact that I have Tom's Realty Incorporated on the application. SBA is not going to do anything with it, but I do have to disclose it. So be prepared to at least say this is how we're affiliated. In the early days of the pandemic, we had a client from Manhattan that called us up, and the woman that owned a substantial piece of, it was actually a restaurant operation in Manhattan, owned interests in 12 other entities. Most of the partners in the various things that she owned also owned between like 16 and 24 other things themselves. So the web of affiliation in that sort of circumstance gets particularly complex. But there is a provision there about control as well. So an investment interest is different than a controlling interest. An investment interest is different than a management interest. So it is complex. It does need to be disclosed, but it may or may not affect your application.
Thank you for that, Tom. And just I want to stress as well, Tom, and hopefully you can emphasize this again for those that are on here. It's music to my ears because we've done an awful lot with Meet Me on Main, where we're closing streets and having outdoor dining, and some of the restaurants have been able to participate. Some have invested more dollars into it, and it's really been something that has been a great thing. Even we've got our Meet Me on Main program where we're actually doing interviews. The second one just debuted this past week, where we have 3 different restaurants we're focusing in on. We'll be putting those out on Facebook. But investment in expanding outdoor dining, there are a lot of places that are putting money into that or are looking to put money into this, and it can be somewhat expensive. Like think of a place like The Place in New City, which went out and bought those igloo domes for outdoor dining. I'm thinking of the folks over at Sangria's that are expanding their outdoor dining over in their place in Congers. And we can go right down the list of all the different restaurants. A lot of the scaffolding that you see kind of on sidewalks in New York City, some of the restaurants here are doing those. We see that outside here in New City at River Court. We're seeing it also outside of Blue Fig and D&D's and outside of a number of the restaurants in that shopping center where that's been quite expensive and it's an investment. So if you qualify for this program, this is a grant, and you could literally pay for an investment that enables you to expand your business for outdoor dining. Just that fact alone, it would seem to me, would make it worthwhile if you qualify under the terms to apply on day one and hopefully get qualified, before the money runs out, to be able to help you expand your business and to be able to continue to grow. So that outdoor dining is super, super, super important. And this is not going to be a passing fad. Certainly myself and the town board have talked about it. We passed a regulation that enables outdoor dining for the rest of this season, for the rest of this year. And the comprehensive plan is being reviewed. It was just made public. It's been deemed complete. So our draft, and we should approve that by the middle of the summer, the latest. And one of the things that we're going to have to start looking at is some of our zoning regulations to be more flexible to allow for permanent outdoor dining. And so I would encourage anybody that's on this webinar, anybody that knows a restaurant owner, this is a fabulous program, even if it's just for the fact that if you want to expand your business and you want resource to capital that you don't have or you don't want to put into this to buy tables, chairs, tents, outdoor, grills, whatever it might be, that's going to qualify for outdoor dining. Could you?
Sure, absolutely. Yeah, George is absolutely correct on that. And keep in mind a couple of factors as well. A, we're moving into the warmer season. People will be more comfortable dining outside. There's a lot of pent-up demand for people who have not been able to go out to eat for a long time, or people who have only gone out reluctantly or much less frequently than they ordinarily would in a place like Clarkstown. And keep in mind what I'll just refer to as intellectual paranoia among your clientele. I myself have been vaccinated. I've been wonderfully paranoid wearing a mask and everything else. I much prefer to dine outside than inside. Yeah, even though I've got the vaccine, why take the chance? So I think there are folks who are going to say, oh, hey, they've got tables outside, let's go down there. So it's going to be a marketing feature for you as well. And like I say, George is absolutely right. The town has been marvelously cooperative in terms of helping people to do this and enabling it and allowing it to happen. It's going to make a big difference for a lot of places. And to my way of thinking, from a marketing perspective, it's going to be huge. As a transition step to start, everyone wants to get back to normal. Dining out is one of the biggest indicators of normalcy that people cite in surveys and things like that. So your ability to give them the ability to dine out once again is going to be huge. And even if your grant's only $10,000, that's a lot of tables and chairs. It's a lot of get some lights put up. Maybe if you need a heater or two, a fan or two, or some such thing. It's going to be real money either way. Absolutely get online. If you're eligible, qualify, go for it. I don't look at this like an entitlement program as much as a response program. Restaurants are arguably, probably second only to airlines and hotels, or comparable to airlines and hotels, one of the hardest hit industries in the country. And it's an industry also that's populated by generally smaller businesses. There's no United Airlines of restaurants. Is there McDonald's? Yes, but that's a whole different category of stuff. And they didn't get very hurt by this. Any fast food place with a drive-through probably did better in 2020 than they did in 2019. I mean, you just look at the app reports that come from the online business that those places are doing. It's huge. So the average restaurant in our average town on Main Street right here in New City, that's the bulk of that industry. That's where this money is designed to go, and that's where this money will make the biggest difference. So absolutely, get online, apply for it.
Good. Now, I think, Tom, we're up to the point for questions.
Sure.
Just one other question that I have, and again, if anybody is on the webinar would like to ask a question, something particular to your business or something in general, please raise your hand, and Roy, our IT technician who's here, will bring you live. But Tom, as we're waiting for questions to kind of get going, I'd like to just ask you, marketing. You mentioned marketing, right? And it's super important for restaurants. So those are also types of expenses that would be able to investment in marketing and
yes,
digital campaigns and online ordering systems and things of that nature. So if there are things that restaurants wanted to do, needed to upgrade to be able to be more competitive and to be able to thrive in this new environment, those are certainly things that this money could be used for as well, correct?
Yes, it definitely can. And I can't begin to tell you the increase in online activity from an actual purchase perspective and a search perspective. The number of folks that search for restaurants online, just the ability to do online reservations. And there are systems that don't charge you 38% of the check to do online reservations with you. You don't have to play the ugly games in terms of online business. And I'll do a quick little preview. We actually at the college are going to be announcing shortly a program under which Rockland Community College is going to provide specific assistance to businesses in terms of e-commerce, getting online and social media, because it's an area that's just so important for restaurants nowadays. There are strategies that you can use that are very cost effective. Asking people while they're at the restaurant to post a review. There's a restaurant over in Westchester. I just thought it was one of those things that was, I'm sure it'll fade over time, but it was cute at the time. They ask you, did you enjoy your meal? Oh, yeah, it was great. Enjoyed it. I mean, I was licking the plate here. Oh, well, can you do a quick review for us? Take out your cell phone, do a review, and they have a TV monitor in there, and you see your review being posted on their website.
Oh, wow.
And, people love to see, I was published. Hey, I could work for the Food Network. I wrote a food review. People love to do it. So take advantage of what people want to do as part of your marketing. Work with them. They want to work with you. People really do want to support local businesses. They want to know that they're helping businesses in their community. They don't want to see shuttered stores on Main Street. It's not a good look. So take advantage of all those things, and here's a program that's going to give you some money to do it with.
Great. So we have two questions. Who are we going to go to first, Roy?
Ramona Vitale.
All right, Ramona, we're going to go with you first. We're going to bring you live, and you'll be able to ask your question.
She's unmuted.
So you're unmuted, Ramona. Go ahead with your question. Ramona?
She's live. She's got.
Is she unmuted?
Unless she's muted on her side.
I don't know if you're muted on your side, Ramona. Make sure you're unmuted on your side, but you're live on ours, so you can go. Yeah?
She doesn't want to talk.
Okay. All right, you can also type your question, Ramona, and we can see it there if you have a question or comment. If you want to type it, we'll see that. What's the next?
Let's try her again.
We're going to try you again, Ramona. Hold on.
All right, we're going to try Nick Rosa.
Okay, Nick, we're going to go with Nick Rosa. So, Nick, you're live now. Go ahead with your question or comment.
He's self-muted. So.
And you're self-muted, Nick, so you're going to have to unmute on your side. Okay, Nick, you have to unmute on your side, on your screen. You're not muted on our side, you're muted on your side.
Okay, we there? Okay.
Yes, go ahead, Nick. We can hear you now. Great.
Great. Question, you were talking about new businesses and a different formula. If I took over an existing business, can I use the previous owner's 2019 numbers?
Okay. Yeah, I think we're getting some feedback, but I think I understood the question. So you took over a business, can you use that business's 2019 numbers? Yes, you're considered what's known as a successor business. So you will use the 2019 numbers and the 2020 numbers as though you were the owner in both cases. It's called successor business.
Oh, okay.
And we'll give Nick a shout out. Nick is the owner of, he's one of the owners of Rick's Club America, and he was actually on our first,
good place.
Our first Meet Me on Main show that we're now on the second one. And I encourage people, if you want to learn more about Nick and about Meet Me on Main, and about Rick's Club America, and importantly, you can go and subscribe to the Town of Clarkstown YouTube channel, or just go check out our YouTube channel. Go view the first Meet Me on Main show, and you'll see a great segment where Nick ably represented the restaurant, and great place. So, check it out, folks, if you haven't had the opportunity. Tom, anything else you want to add? Or Nick, do you have any other questions?
No, I'm good right now. Thank you.
Okay, yeah. So, Nick, what you can do is, just call us up, 845-356-6065. That's the SBDC, and I'll explain to you exactly how you're going to have to do that.
Right, and Nick and his partners took over Rick's Club America literally weeks before the shutdown. So they bought the business, and then it shut down.
And then got hammered.
But they're plugging away, and they're doing great. And we're happy to see that they're going. But Nick, you're absolutely eligible using the former owner's information to be able to apply. And I know that you're interested in doing an expansion of your outdoor dining, so this might be a great opportunity for you to get free money, essentially, to get what amounts to a grant to help you with any number of expenses, including potentially the outdoor expansion.
Right. Yeah, I sort of like in this program. Free money's like free food. It always tastes a little better.
Tom, can you
any other questions?
Again, please.
The phone number.
The phone number, the phone number for SBDC, the Small Business Development Center, and everything is free and confidential over there, is 845-356-6065. And if not, just reach out to George's office, and they'll get any kind of questions or whatever over to us as well.
Right, and my number here, obviously, as you know, is 639-2050, 639-2050. People can also reach out to us at supervisor@clarkstown.org, supervisor@clarkstown.org. And as I said, follow us on social media and really subscribe to YouTube. This presentation will be up on the town YouTube channel later today or by tomorrow, the latest, and we're going to put a Facebook post out with a link to it as well. We're going to email it to all the restaurant owners that we have on our list. So, please, please look for it. We'll get the info out, and hopefully people participate. Are there other questions?
We can try getting Ramona on again.
Ramona, we're going to try you again. So we'll bring you live. Thanks, Nick.
She's unmuted.
So, Ramona, you're unmuted if you want to ask your question or your comment.
And she'll have to email you guys or something.
Yep. So if you want to email. Jeff, did you have another question that was asked?
Yeah, Tom, you mentioned in line with Nick Rose's point about new businesses that came up. In Nick's situation, he's a successor business. He purchased that directly from an operating restaurant. We do have a number of restaurants that opened as new businesses right prior to the pandemic. My understanding is there's going to be something there for them. Can you speak to anything that is known at this point about that?
Yes, they're going to be looking at a shorter period of time, and it varies based on when you opened. They're looking at the number of months that you're open, average revenue, and average expenses, and they will come up with a value that where they're sort of extrapolating, had you been open earlier, this is what you probably would have gotten. And our understanding is it's going to be real money, that they're not stiffing the people that were not open in 19 as well. So yeah, there are formulas for it. There's like 5 or 6 different ones, so it's kind of tricky to get into them now. But yeah, just call the office and we'll explain how that's going to work.
Thank you.
Sure.
Okay, are there any additional questions or comments that people have? So I don't think there are. Tom, is there anything else you'd like to add before we conclude?
Not really. This is one of those programs that people are going to say, well, the application's a pain in the ass. It's going to take me all day to do it. It's your restaurant. You've invested your life in it. What's another couple of hours to do an application for free money? And, please rely on the resources that are out there for you. The town wants to support your activities. The town wants to support your businesses. Reach out to the town, reach out to SBDC. We are here to serve, and we are here to help you guys, and we're happy to do it.
So Tom, Ramona typed her question. We're having some audio issues but we'll read Ramona's question. Do you have it, Sean?
Yeah. Will you be letting us know when the portal is available for the application?
Yes, we'll get the information. I guess Jeff has a list of restaurants he'll be emailing, and as soon as we hear, we generally will hear 24 hours before it opens. So we'll try to get that information over as soon as we hear about it. But don't be surprised if you read about it in the Times before you hear about it from us. SBA is not always wonderful about giving the resource partners the information when we're supposed to get it. We had a guidance meeting with them last week on the SVRG program. At 1 o'clock, they sent us the email for a program that started at 1:30. And so, oh, sure, we'll just drop everything and log into your stuff. So yeah, Ramona, as soon as we know, you'll be on our list. And Ramona's got a great place. And it's a nice little place, awesome food. I've eaten there. Wonderful, wonderful place to go. And Ramona, you're actually on our list at SBDC, so you'll be getting it from us as well, directly.
Right, and again, if please sign up for the Town of Clarkstown. In my office, we have an e-newsletter that goes out every Friday. So we put links in. We'll be putting a link into this presentation. We'll be putting that information out. Follow us on Facebook, either on my page, George Hoehmann, Supervisor George Hoehmann, on the Town of Clarkstown page. Also, as I said, please sign up, subscribe to our Town of Clarkstown YouTube channel. We're doing an awful lot with that, and there's a lot of information that's out there. And all of these presentations by Tom Morley about the PPP program and about this program and any future programs that might come out can all be found up on the Town of Clarkstown YouTube channel. And if you subscribe to it, you'll get notifications whenever anything new is put up. But we'll be emailing out and letting everybody know, and the folks on here. So you'll hear it from the town, you'll hear it from Tom, and if you're not signed up for these, on any of these locations, you may not hear it from us, but you may hear it in the general media. So it's important that you sign up for the e-newsletters and also contact us here in the office. Again, Tom, just give your contact info one more time.
Sure. It's the New York State Small Business Development Center at Rockland Community College, and I have to thank the college for supporting us over there, which they do. And they enabled us. We've actually been in the office since the pandemic started. The college considered us essential service for the business community. You can reach us by phone at 845-356-6065. Once again, 845-356-6065. And a big thank you to Supervisor Hoehmann and the town for helping us get the word out to the restaurant community and to the business community. We very much appreciate it, George, so thank you kindly.
And thank you, Tom, again, because you've been a real great resource for us. You know, there's been a lot of downsides to the pandemic, but one of the upsides for us in Clarkstown has been the outdoor dining, the Meet Me on Main, and working with you, Tom, because you really, we reached out last week and we had a webinar in place, you know, within a week. And I want to thank Erica Machete from my office, Roy from our IT department, Jeff from our economic development department. So again, I'll give you the contact for the town. You have Tom's contact. You can reach us here at my office, the supervisor's office, 639-2050, 845-639-2050. Also, you can also email us at supervisor@clarkstown.org, supervisor@clarkstown.org. You can also reach out to our economic development staff person, Jeff Gillies, and Mr. Gillies is located here in Town Hall, and his number is 845-639-2063, 845-639-2063, and you can call him directly, and he'll also help. And again, we'll be sending the information out. So that'll about wrap it up. We don't have any other questions. I want to thank you again, Tom. I want to thank Jeff, Roy, Erica, and all the staff for helping to bring this together so quickly. And this will be loaded up onto the town YouTube channel, so you can go back and see the slides. And we'll also be emailing that out as well. And there'll be a link to the presentation and to the YouTube channel, and we'll be doing a Facebook post as well. So you'll be able to find it in a lot of different ways. So thank you, everybody. Thanks for participating. Hopefully this program will help very many of you. And please help spread the word to the rest of the restaurants in Clarkstown. Have a great day, everyone.